Good morning, everyone, and welcome to another episode of the RKL Leadership Podcast, where we empower tomorrow's leaders through the sharing of knowledge, experience, and inspiring stories. I'm your host, Rob Cameronpour, and my very special guest today is Robert Cultraro. He is the current CEO of Nordivest Advisory, formerly Chief Investment and Pension Officer at Hydro One for the past 18 years, has a background rich in strategic investment management, governance, and risk management. Robert has held several high-profile roles in the company since 2005 with expertise in developing and monitoring strategic asset allocation and investment selection. His leadership also extended into roles with various boards, such as the CFA Society of Toronto and the Pension Investment Association of Canada. Before I pass it on to you, Robert, I'd like to thank you so much for being with us today and sharing, your knowledge and experience with the folks out there. Thank you again, and welcome to RK Leadership Podcast.
Well, you're welcome, and thank you for having me and reaching out.
Awesome. So are you ready to get started?
Perfect. Sounds
excellent.
Good.
Let's go. So why don't we start off by you telling us a little bit about your story and how you got into the corporate world?
Perfect. We're going back now over 30 years, so I hope you have some time.
We got lots of time.
Good. Well, I started off my career originally I was an intern, and I worked for a company where they were selling media space, and I worked in their finance department. My intention was that I wanted to get finance experience. Specifically, I was thinking of being an accountant. And at the time, I reached out to the CFO, and I mentioned this in one of my LinkedIn posts, and that is just asking for 5 minutes to ask some questions about the whole accounting career path. The conversation was very quick, but it was enlightening, and I'll say it that way because he's a person that's been in the business probably at that time for 30 plus years, and he had a lot to share. And his point was, what do you like to do? What courses do you really like in school? And I said, well, I really, really like finance. I like that whole investment, area. And so he said to me, well, tell you what, there's a project I'm going to get you to work on. And if you like it, let me know, and we'll see where we can go from there. And that's exactly what he did, and I absolutely loved it.
Nice.
And so, one of the things that he did was, which is amazing, like he didn't have to do anything. I was an intern. He pushed me along a path that I was really, really liked, and that was investment advisory and investments. And so he introduced me to somebody at Merrill Lynch, and that was one of his contacts. And when I graduated from university, they hired me, and off we go. And so I spent about 8 years in various roles at Merrill Lynch. And then moving on, I always believed that you should spend at least 5 years, but in any role. But I thought that I wanted to give something a try, and that was work more with institutions rather than retail. Merrill Lynch was predominantly retail. And so I joined Aon Consulting. And when I joined Aon Consulting, again, my plan was to give it 5 years. And one of the areas that I felt that institutions were probably not being as well served or were not as invested in was in private markets. So I focused my entire consulting career at Aon Consulting, almost 5 years, predominantly on alternative investments. And that's because I had some experience at Merrill Lynch investing in alternatives. And that worked out fantastic. And one of my clients at the time that I did some consulting work for was Hydro One.
Nice.
And so Hydro One, when we had, originally the conversation around building out their alternatives investment platform and allocation, the intention was to start with about 5%. And my view at the time was 5% is really just getting your feet wet. It's you're dipping your toes in the water. If you're going to do this, it's going to take a lot of effort, a lot of resources. It's not worth 5%. You have to have the intention that at some point this could be 20% of the fund. And they agreed, and they thought that that was the right thing. So one of the things that he at the time, the current CIO, the head of the pension plan, did was made me an offer, and the offer was simply, why don't you join us? And I think he caught me at an interesting time in my career, and that was I spent 5 years at Aon. There were some changes that were going on with respect to the alternative spaces, specifically around my role. There was some change with respect to some of the leadership at Aon at the time, and one of my mentors moved on. And when he moved on, it was kind of like, okay, well, maybe this is an opportunity. I'll take it on for 5 years and see what happens. But I loved investment consulting. It was an area that I thought was just so it was intriguing because you get to work on so many different things.
That's right.
One of the benefits of working with Hydro One, though, was the fact that now you're on the side where you're actually making the investment decision. You're not advising or consulting; you're making them, which is interesting because there's another level of due diligence, and there's another level of understanding of those investment decisions that you make. Because ultimately, when you look back at performance, you own it.
That's right.
Now you made that decision. You can't, point your finger at anyone. So 5 years into that role, there was some change with respect to the leadership, and I was given the opportunity to become the CIO of the pension fund.
Nice.
So I did that for 13, almost 14 years. So altogether, I was at Hydro One for almost 18 years. So that's kind of a progression of, how I ended up at Hydro One and my career path for the last 30 plus years.
Amazing. That's a great story. And thank you for sharing that, Robert. You talked about career advice and mentorship. So one of the things a lot of young people struggle with these days is, when you start up in a company as a junior or an intern or a co-op, there's a fear of approaching senior people and asking them about that career advice and mentorship. What's your advice to young people out there?
Yeah. So I've always felt that as a person that has experienced that growth was because I had the opportunity from very senior people in those leadership positions to give me that time.
That's right.
And so when I finally got to a point where, I was able to, I believe, provide some of that advice, I always offered it.
Nice.
And so one of the things that I did with my staff is I ensured that I had one-on-one meetings that had nothing to do with what they were working on. It was all about their career. And it was all about, how are you feeling? How are you doing? Are you enjoying the work that you're working on? What are your intentions? Like, where do you want to go with this? Like, is there something else that you want to do that maybe is more intriguing, or you're getting bored? The questions, just having those conversations, and I'd have them regularly with my staff. But I also felt that, what I think is really important is anyone in those leadership roles or in leadership positions, give people those. It's almost like you can't just go out there and say, I'm available for coffee if you want to meet me.
That's right.
But you can do little things like be approachable, be somebody that recognizes somebody in the hallway. Say hello, get to know them. In an elevator, if you recognize a face, be approachable. If you have your head down, you're looking on your phone, you're not approachable.
Yes.
Right? So my feeling is, as a leader, you just need to be more approachable.
Be present.
Be very present and give those. These are the future leaders, and you were once in those positions, and where you're trying to make it and grow, and it's one of those things where the mentoring, the even just the 5 minutes. I always say it's just 5 minutes.
Yes.
5 minutes of my time to give somebody some advice that might be a career change.
That's right.
So
makes
it's
a
so
huge
important.
difference.
It makes a huge difference.
Awesome. Thank you for that. Now, Robert, how did you develop and adapt your investment strategy to manage Hydro One's pension fund effectively? And what advice would you give leaders responsible for long-term financial planning?
That's a big question. There's a lot. There's the second part's probably bigger than the first part. The first part, the one thing that you always have to have in making an investment decision is, first of all, it's not your money. So the most paramount primary objective was that this was a trust, and it was a trust that the intent was to pay pensioners, the beneficiaries of that trust, and to ensure that there's sufficient assets long-term to pay those benefits. So most of those decisions that were made were always made in the best interest of plan beneficiaries. So that eliminated a lot of what I would call decisions that were not in their best interest. So, and there are things that people think about and invest in that might not be in their best interest. So everything was aligned from that perspective. When you figure out that perspective, then you set objectives. And when you set objectives, then you can make decisions based on what are the best investment decisions that you can make to meet those objectives. And things fall out. And you end up in a place that sets your, what I would call the most important decision with respect to investments, and that is your asset mix decision.
That's right.
And when you make your asset mix decision, then you go through the process of implementation. And then implementation is, how do you best select investments that fit within those asset mix buckets, right? So having said that, the priority long-term was that you do not have to complicate things. And if you can simplify them, some investments can be fairly complicated, but you don't have to complicate it to the point where it's very difficult to understand, and you need teams of people to try to,
break it down.
To break it down,
Yeah.
right? Exactly. So that was how we managed an institutional pension plan. And one of the things that we can do in an institution that's harder to do with individuals is that we had a very long-term time horizon. So if you think about it, somebody who joins Hydro One today and starts contributing into the pension plan, maybe is 20 years old, a linesman might be 20 years old, 22 years old, work for the next 30, 35 years, and then live for another 30 years, right? So there's a duration of potentially 70, 80 years, maybe even 90 years if they live long enough, of an investment horizon. And so you can imagine that if there's, thousands of these types of liabilities, I call them, if you have thousands of retirees and active members, your duration is pretty long. So you can make very, very long-term decisions.
That's right.
And when you make long-term, very, very long-term decisions, short-term noise is easy to deal with. And it becomes less emotional. Because you're not dealing with individual emotions. When I worked at Merrill Lynch, that was probably the most difficult part of the job, was dealing with emotions. And I've got all kinds of stories to tell you about that. But one of them would be like, for example, somebody might have a significant amount of money in one stock, and that one stock has done very well for them, and they're emotionally tied to that stock, but it doesn't make sense for them to be under-diversified to that extent. So you diversify out of that stock, and that stock continues to go up. Well, that person's not going to really think much of you, and they're not going to think highly of your abilities, but that's the right thing to do. Now, when the stock eventually comes down, let's just say it does, and they're well-diversified, and they're the opposite of that is, why didn't you get rid of more, right? So those are the kind of things you're dealing with in more of the retail space. So my suggestion and recommendation to anybody in the retail space, to ensure that they have a good understanding of their objectives, that's number one. Stick to that asset mix and adjust it accordingly as your objectives change. And as you move more towards, the later stages in your life, and you potentially are going to require to live off those assets. And so that your asset mix is going to change, but your objectives will change slightly. But ultimately, at the end of the day, your asset mix is going to adjust, but your investments, that implementation doesn't change very much. Whatever you do, do not get caught up in the short-term noise, because it's going to happen. And I can tell you, I've been through all kinds of events, and in 30 years, I started off my career just shortly after when Iraq invaded Kuwait, and
Yes.
it was a very difficult market. And then I've seen currencies fail. I've seen different countries, markets fail. I've seen sectors do very good and then very bad. I lived through the tech bubble.
Yes.
I lived through the financial crisis. If you just did nothing, you would be fine.
Hmm.
So seems like huge events, massive events. Oh my gosh, I should do something. This is too risky. But if you did nothing, it was the best decision.
Do you feel like that's when people start panicking and making
Absolutely
irrational decisions?
Absolutely.
Excellent. So, Robert, you talked about two things I wanna talk about when it comes to decision making. Again, as a young leader out there, like you said, you're not dealing with your money. How do you get over the fear of making decisions that could have a very negative impact on people's livelihood?
That's a great question, and it's one that comes with, it comes with a lot of on your shoulders. It does. You can't downplay that in any way.
That's right.
It's all you can do is ensure that you are giving the best advice based on your background, your experience, your knowledge, your expertise, that you can make. And so I know when I make investment decisions, and I know when I advise people on investment decisions, it's based on what I believe is the right thing to do.
Mm-hmm.
And again, caveat, the right thing doesn't necessarily mean it's always going to be the best result.
Thing, yeah.
But typically, I'm not making decisions or recommendations that, in my opinion, are going to be speculative to the point where, I'm making bad investment decisions on behalf of, they're not my money, but their money. So I always take that into consideration. So, give you an example. Would I be recommending individual stocks to people, like, for example, Bitcoin or Nvidia or things like that? No, because there's a speculative nature to that, right? And so I try to take a more conservative path. I always have. Risk management's always been paramount.
Okay. And then now again, you're in your early stages. You're making these decisions, and people come and challenge those decisions, and we see that all the time in the corporate world or outside world. How do you stick to the decision you make and not have people kind of get you to question yourself in the decision that you've made?
Well, I'm okay with anybody questioning the decisions I've made. I think it's important. I think it's healthy. So I'm not worried about that aspect of it. And sometimes I question the decisions I made, and you should. And because things do change, right? Events change, environments change. Very good decisions today might not be the right decision in 5 years from now. And in 5 years from now, if you haven't really thought about it, if you just, I'm not talking about putting it in a vault and throwing away the key, right? You got to continuously think about the decisions that you made. So right. I would recommend that you consistently review your investment decisions to ensure they're the right decisions and they continue to be the right decisions. Likely it's not going to result in much change, but adjustments can be made, and they probably should be made.
That's right. Okay, perfect. So you kind of touched upon this. Can you share your approach to leadership during times of market volatility? And what mindset helps maintain focus and stability when facing high-stakes financial risks?
The best way to answer that question is to probably give an example, and that's during the financial crisis.
Mm-hmm.
During the financial crisis, we saw some significant declines in the market. And when you experience those kind of declines, and which are, as I said, they're typical. But when you experience them, and to the point where during the financial crisis, this was an event that there was a lot of concern whether or not we would recover from this event and we could be in a long-term depression.
That's right.
And this whole idea of your long-term approach to investing could be a very long-term approach to investing.
Yes.
And so you have to revisit, that kind of environment and think about it to some extent. But hopefully when you initially made your asset mix decision, that you're in a position that you could ride out those kind of environments and adjust accordingly if necessary. But it's still very, very difficult to go through. And so the mindset is you basically now, you have to dig down deep, really deep into understanding what's going on.
Mm-hmm.
And you really have to pay attention to the experts that are in charge of dealing with this type of environment that we were in. And at the time, as you may recall, there was some risks that the banking system would fail.
That's right.
And if the banking system failed, that is a responsibility of those that were responsible to ensure that the banking system doesn't fail. So you're paying attention to what are they doing to ensure that the banking system doesn't fail. And what I realized is that if you throw enough money at it, and that's exactly what they did, and to ensure that there was the backstop of the government at the time, you're likely going to recover from this. You're likely going to stop the system from failing. And if you stop the system from failing, then eventually you'll have a recovery. And I think at the time, I'm simplifying it, but at the time, that's what I felt. I felt that there were a lot of very senior people in government and at the banks that they were responsible to ensure that the system doesn't fail. And they did everything they could, and even things that were very unique that have never been done before in history were being done. And so with that being said, when you're paying attention to it, it's all hands on deck. You got to pay attention to what is happening. And we were paying attention to it. And as we were paying attention to it, we and I mean daily and almost, by the hour, we were paying attention to it to a point where the comfort level, you have enough information, the comfort level allowed you to deal with the situation that you're in. And so you can kind of ride it out and say, I think we're going to get through this. I really feel confident that we're going to get through this instead of panic.
That's right. And you can't panic because everyone else is watching you, right?
Yes, not only that. And the problem with panicking is you're likely going to find it very difficult to recover if you panic and you move and you miss the recovery.
That's right. Awesome. Thank you for that. Now, Robert, you've managed large teams in investment and pensions. What key principles do you follow to ensure alignment with your team, especially when handling complex financial decisions?
Yeah, I call them guiding principles. And those guiding principles are, obviously things like, for example, ensuring that every decision you make are in the best interest of the plan beneficiaries. And if it was an individual, it'd be in their best interest. The second one is you need to, in my opinion, every decision has to be done ethically. You need to have your values in place. And so, and we know that sometimes that's not the case. In fact, there's lots of evidence where, you're being sold and it's not in your best interest.
That's right.
You're being recommended to do something, but it's not in your best interest. And so that would be what I would say probably the key guiding principle in my life. And it's not just with respect to making investment decisions. It's also in friendships. Is this a good person? Are they ethical, moral? Or are they just a bad person? It's like, well, sometimes you have to deal with people that are, not. I don't like to use the word narcissist, but to some extent there are. It's every decision, every anything that is being suggested or recommended is not in your best interest. It's in their best interest. And so, with that being said, my team, and you got to this point with respect to managing a larger team. I think everybody on the team really, really, and every year we will review those guiding principles. And there's more, but I won't bore you with all the details. But those guiding principles were something that we reviewed and looked at and revisited to ensure that everybody's on the same page. Because when you have those guiding principles in place, you know what you're doing. You know why you're doing what you're doing. And
That's right.
And it makes it so much easier. And most importantly, you're a good person and you can sleep at night.
Absolutely. So I want to put you on the spot with respect to that. You talked about values and ethics, which, to me, it's very important. Have you been in a situation where you were asked to do something that didn't align with your values or, it wasn't ethically sound? And how did you deal with that situation?
Yes. I'm not going to provide details because
For sure.
For obvious reasons. But
absolutely.
Yes. And it's very difficult, especially when they're in a position of power. So what advice I have for you and anybody else that's dealing with that kind of situation is you need to stick to those values, those ethics. You need to really focus on providing the information that they need so they understand why you are committed to your position. And if you're still being directed or pushed in a direction that you're not comfortable with, well, that's when you have to make a decision.
That's right.
And if it's, that decision, I don't mean to proceed with what you're being told to do, because if you're not comfortable with that decision, then you could not make it and risk your career, or you can move on. And it's okay. It's okay to move on.
Absolutely. And I think this happens more than people think in, bigger corporations, and you're asked to do certain things that don't align with your value. And it goes again back to the people and the fear that they have and the insecurities within them to say, hey, you know what? I got kids to feed at home. I've got a family. How can I make that decision where now I'm forced to give everything up and go start finding another job or whatever it may be because I'm not really comfortable
exactly.
with this.
And my view on this, Rob, is and that is, it's kind of like you do it once, you're going to do it again and again and again, and then you're compromised. And, you have to be flexible and knowledgeable about the situation. And sometimes maybe you don't, maybe you're not making a decision that is consistent with your beliefs, but maybe you need to think about your beliefs.
That's right.
Is there something that maybe you're too conservative in your approach, and that you should think of other options? And that's when you can. I wouldn't say compromise, because you're not compromising. You're basically saying, maybe I need to think about this. Maybe I need to look at options. And I always believe that the math sometimes doesn't lie, right? So
yes,
mathematically it works. It works. But if I'm not comfortable with it, then that's my problem. And I have to deal with that. And I'm maybe there is some things that I should do that I'm being asked to consider. But if the math doesn't work, the math doesn't work.
Yeah.
And it's almost, you can bend it and twist it any way you like. But if the math doesn't work, and even after you've looked at everything, you've even considered all the assumptions behind the math, and you thought about it from the perspective of, okay, maybe the math is wrong. And you've tested that. And you really stress tested that. And it still doesn't work. Then I don't know how you make a decision. Even if you share that and you communicate that, if that information that you shared is still not being considered or accepted as a valid response to the decision that you're making that's not in that person's best interest, then you know that there's something else behind that.
That's right.
And you know that for sure you shouldn't be making that recommendation, or you shouldn't be implementing that recommendation.
Excellent. No, I greatly appreciate you being, candid and sharing that with us. Thanks for that. Now, how do you approach balancing risk and reward in your investment strategy? And what would you suggest leaders consider when making high-stake decisions with potential risks?
So balancing risk and reward is it's very individual. So if we're talking individuals, I would say it's very specific to any one individual. So some are more risk tolerant than others, and there's always a process to determine what is. And here's something that's really important, and there's the whole subject area on this in finance. It's called behavioral finance, right? So what I do know is that people's risk tolerance is typically higher. And let's just say, for example, we've had a pretty good bull market in the last 5 years, and it's like, I've got a lot of risk tolerance. I'm happy to take a lot of risk, and that's because their risk tolerance is very short term. So they haven't really experienced risk. And the emotion when it comes to making money is not as significant as the emotion of losing money. So when you make money, you're happy.
That's
Great,
right.
I'm going to buy a car. When you lose money, it's a big emotion and it's significant. And so what you have to realize is that you're going to go through a period, guaranteed, with a long-term approach to investing, because you're not going to be able to time the market effectively. You're going to lose money. There's going to be times where you're going to be down, and sometimes down significantly. If you can't handle that, you think you can, but likely most people are probably 50% of the risk that they think they can handle, they can handle. The other 50%, so what I mean by that is, if you're down 10%, no problem. If you're down 20, things get a little tricky. If you're down 40, it's a big problem. And so they think they can handle 40, they can't.
Interesting.
Yeah. So and that's the, I shouldn't say they can't. I'm generalizing, but when they say they can handle 40, they probably only handle 20. When they can handle 20, they probably only can handle 10. And that's because the emotion tied to losses is significantly more than the emotion tied to gains.
Interesting. That's an interesting concept. I had never thought about that or heard that before. So thanks for sharing that, Robert. Now, you've served on multiple boards. How has governance shaped your leadership style, and what are the essential elements of effective governance in finance?
So I can give several examples of that from my perspective, but I've learned a lot because I did my ICD, the Institute of Corporate Directors designation, and what I can tell you is boards have a huge responsibility, and they're very powerful in their roles and positions. They affect multiple decisions in ways that can have significant impacts. So if you're investing in a public company, for example, pay attention to the board. The board is responsible to hire, review, retain, and ultimately sometimes very involved in strategy. So, but retain and hire the CEO. Now, sometimes if the board has to ensure that they're being independent and unbiased, and ensure that they're hiring the right CEO. Because ultimately, if the board hires a CEO that's in the best interest of the people that are hiring the CEO, then you might not have the right CEO. So this, CEO has got to be independent, has experience, knowledge, all those kind of characteristics, and not simply just, a figurehead of the board. So the board has to, when they hire the CEO, they have to hire the CEO and leave him alone. Let him do his job. That's why they hired him. And so when they get their hands too involved in making decisions, the CEO is a puppet, right? So ultimately the board is running the company. And so the board is very, very powerful. And so the board needs to know its role. And its role is, as a very experienced board member, here is some advice to help you, to support you, to direct you, to ensure that you're making good decisions. But it's not to manage you or the company in a sense of, those decisions. So with that being said, the other most important decision is that the board makes is strategy, or at least they are very involved in strategy. Some boards are very involved, some are less involved, but ultimately they typically approve, the strategy of the company. Right. And strategy is key, right? So, and in some cases, like for example, if you think of companies that have failed, a lot of times it's because the strategy failed. And then, you can use all kinds of examples, Blockbuster, Kodak, you name it. Those companies failed because their strategy failed to adapt to this new technology. Yes. And so when you have a situation like that, you might not have the right board members. So you got to make sure you have the right board members. But ultimately, the board is it's key. It's very important. And so, unfortunately, I think to some extent, board members are not as there's a lot of history around those that are on boards because, certain relationships. Yes. And sometimes boards are being pressured into hiring people on boards because of certain related DEI requirements. And so with that being said, you need to ensure, for example, like if cybersecurity is really important to your company, it should be. You should probably have somebody on the board that really understands cybersecurity. So it could be something as simple as technology. You probably want somebody that's been in that role that has significant expertise and knowledge and can understand technology. So what I'm getting at here is, for example, any board that I was involved in, what I've noticed is that your board members have to really focus on very high level information. When the board starts to dig down deep and starts getting into the details, they're not really making their roles are they don't understand their roles is what I'm getting at. So that's right. And I think there needs to be a little bit more education and with boards to ensure that those boards are not getting into those details. Absolutely. So do you recommend the ICD certification? Highly. I do, because it does highlight board responsibilities, and it does highlight when boards need to get active and need to be very involved. But typically, somebody's on a board and they have a 3-hour meeting. Let's just say there's this 3-hour meeting. Well, that meeting probably could be an hour. There's just so much information that's being shared that's not necessary. And the one thing with respect to that 1-hour meeting is what's really important that the board needs to know. And ultimately, it's a two-way street, right? So the information going to the board needs to be information that's the right level for the board. Absolutely. And then and that information that's going to board is, if it's a request, it's got to be very clear what you're requesting. If it's not, it's just information, right? And ultimately, the board really doesn't need, and this is unfortunate, but sometimes the board feels like they have to be active and ask questions. They don't need to. That's right. This is, you could sit back, listen. It's just information. if you do have questions, great, but you don't need to be active for the sake of being active. Because those meetings that were 2 or 3 hours could be an hour if the board just knew what the role was in that particular situation.
Exactly. So another question with respect to that, Robert, is I know a lot of folks trying to get on different boards. I know I've tried in several cases as well. What's your recommendation in terms of where do you start, and how do you get on the various boards, and what should you look for?
Well, you can start with non-for-profits. There's a need for them. Ultimately, there's many non-for-profits that need very good, smart, experienced people to be on their boards. The paid for board roles are a little bit more difficult to get on, but it's very experience based. So typically, a good board member would have those expertise that I was suggesting. So one of the things that you do is you do a gap analysis. That's what they should do, the board, and determine whether or not there's certain gaps that they want to fill, and then they would go out there looking for those types of individuals that fill those particular gaps. And ultimately, you're looking at experience. So my suggestion is getting out there and making yourself available.
That's right.
And there's different types of resource companies that actively pursue or searching for board members. But let's remember and this is don't get discouraged, right? Because in many cases these roles are being filled directly, like through people that are aware of individuals that would be great board members, right? So, and then they start to populate that board with people that are, they're familiar with or inexperienced. And a lot of times, if you're on 2-3 boards, then it's a lot easier to get on another 2 or 3 boards.
That's right.
So it's the first 1 or 2 is hard to get on. But ultimately, once you have that experience goes a long way.
Yeah. And it's, again, I think like you said, it's who you know is, in terms of the relationships, who can open doors for you.
There's a certain aspect to that, right? So if you to some extent, there is a certain approach. Most boards are going to use some sort of search consultant to help them with that process. But the ones that are in that circle typically get more access or more opportunities.
That's right. Absolutely. Good. Thanks for sharing that, Robert. Now, with several professional designations, how has lifelong learning contributed to your career? And what mindset helped you pursue multiple certifications? And how do you view their impact on your success?
Well, I answer your last question first, and that is the impact is significant, right? So let's face it. Those designations, to some extent, they're a lot of work, a lot of time, a lot of effort, but they're important.
Yes.
So getting the CFA opened the door. Doing, the CIO, which is a Chartered Alternative Investment Analyst designation, not only helped fundamentally with understanding alternative investments, but it helped with respect to opportunities to advise on alternative investments. There's a designation behind it.
That's right.
Getting the ICD really helped with respect to understanding how to effectively be a board member. And so when you're applying for board positions, that helps because you've essentially got some theoretical knowledge on that role, not just practical, because sometimes practical is not good, right? You can have bad experience. So the theory and the practical, I think, aligns really well. So I think the combination is very important. Experience and credentials. So you should continue to build your knowledge through not just having letters behind your name, but even just taking courses, attending seminars, being very involved in certain, reading a lot, but also being very, very involved in your network.
That's right.
Because you can learn a lot from your network as well.
Couldn't agree with you more. All right. Now, for inspiring leaders in finance, What advice would you give out about building a career in investment planning? And are there specific skills that you believe are essential?
For those that are aspiring, first of all, I'm not going to say investment planning or financial planning because that could be considered a certain type of designation or service, right? So, but I would say generally in finance. I think if you're young and you're still in school, do everything you can to get your MBA, your CFA, get your credentials. You're in study mode.
Yes.
Do it. It's hard, but do it. Volunteer if you can't get a job, but there's a lot of opportunities with respect to interns.
Yes.
I know, I get it. Money drives everything. Education's not cheap, right? Ultimately, you need to make money. You need a summer job. There's a lot of companies out there, especially startups, that you really just can't pay or can't pay much.
That's right.
But that experience is massive. So what I mean by that is you're involved from everything from picking up the phone to setting up a website or doing some finance accounting. It's massive.
Yes.
So I think startups are in need, as well as you can learn a lot from those particular opportunities. So try to, if you can, look for opportunities where you can work as an intern at a startup. What I find is most want to work at one of the larger asset management firms for the pension plans, right? They all want to get that experience, but that experience is good and it opens the door. And don't get me wrong, it's a good approach. But the other approach is really getting to understand business, and so that's instead of being so specific to, like, for example, let's just say one of the large pension plans hire you, you're probably just going to do, some reconciliation on some investments, and that's all you're going to focus on, and that's all you're going to do, right? So
That's right.
You're really not getting a lot of good business knowledge.
Exactly. Now, there's a good segue to my next question for you, and that's we're going to switch it up a little bit in terms of your new startup. I want you to talk to us about the new company that you've kind of started and what inspired you to open that.
Well, okay. So thank you for the opportunity to talk about it. But so what inspired me is really, I would say, something that was kind of deep seated. And I would say it goes back to my early days where, I've always wanted to do something that's independent. I always believed that I was going to be an entrepreneur. I think getting married and having kids kind of, because I was probably more risk adverse at the time. And being an entrepreneur is very, very difficult from that perspective, right? So it's kind of like it's not going to pay the bills, right?
That's
so,
right.
And you just got married and now you have a kid. And so you need a regular income. And so that really was kind of the direction that I took for almost 25, 30 years. So it was a deep-seated desire of wanting to be an entrepreneur and wanting to do something independent. And so when I had the opportunity after 18 years at Hydro One, where I could retire from Hydro One, I knew I was young enough at 55 to do something like that. But I knew if I maxed out my tenure at Hydro One, which easily could have, and I was doing very well, and there was no reason really for me to walk away from not doing that. But I knew at 60 it was going to be harder. And at 65 was even going to be harder. And it was always a desire for me to do something. And here's where it worked really well with my generally risk adverse psychology. Let's call it that. I just, I don't like to take a lot of risk. Now, one of the objectives really wasn't monetarily driven. It was driven by desire and love for investments. And so when I get up in the morning, I get up same time as I used to when I was working at Hydro One with the same desire, turn on CNBC, read the Globe, read the Post. Like these are the things that I do every day, and it hasn't changed because I love it. Now, the what has changed is, okay, where am I going to go with this new business model? And so a couple things came out of some of that work. Mm-hmm. Keep in mind, this was not something I've been working on for the last 3 years. It just started. The succession I was working on for 3 years.
Nice.
And that's very important. But when it came, because I was so busy at the time and the succession, I never had a plan to retire at June 1st, 3 years ago. That was the earliest I was thinking of retiring. Mm-hmm. The decision to retire June 1st was made late in the year. So and early in 2024. And when that decision was made, then that set off a whole set of other responsibilities at the time with respect to doing the transition, to ensure a successful transition. So June 1st came and it's like, okay, now what do I do? Yeah. So I had some concepts, but nothing really, where I spent, a lot of my spare time trying to figure out a business model. But what I did know is I kind of categorized it in a few different areas. So over the last 4 months, I've categorized it in areas that I think are what I would say is probably very consistent with the typical retirement route, and then we just talked about, and that's board-related roles. Mm-hmm. So right now I'm on a couple boards. I'm on the Nunavut board and an advisory committee, and I'm also on I'm the chair of the board for the ETF business for JP Morgan Canada. So these are a couple board roles that I'm currently on. And I'll probably take on, because I believe some volunteer not-for-profit roles, I'll probably take more on now. Depends. We'll see. I'm very specific about the opportunity. So it's got to be one, not where it benefits me. It's where I think I can benefit that particular cause. Mm. And then secondly, that's the typical route that you would take when you retire, is get on boards, right? So, yes. Okay, yeah, that's kind of a part of the business model, but it's not really a business model. It's just that's what you would do after retirement. So number 2 is where I think I can provide a lot of value, and that is providing institutional investors with strategic investment advice. Mm. And what does that basically mean? It means just about anything that you would want to think about as somebody who has a CIO experience of over 30 years, right? So
that's right.
In some cases, some plans have those specific people in place. And in some cases, even though they have them, they might be looking for good advisory services, not consulting. Because your consultants are going to do reports and they're going to do analysis, yes. But they're ultimately, do they have practical experience, which I have, right? So ultimately, it's something like, for example, when somebody's looking to build out their private equity portfolio, I did that 20 years ago. I built it out, and it's very established private equity portfolio. So if you're thinking of expanding in private equity, infrastructure, real estate, we've built out a very mature portfolio. I have a very experienced, close to 20 years of specific implementation of alternative investments. So I can provide some good direction that you might not be getting from your consultant. Not to suggest that the consultants there's no need for them. There is, and they should. But I could be part of the opportunity to ensure the success with the use of the consultants.
That's right.
Okay? So that's one area. That's another area. So, and the area that I typically focus when it comes to those types of opportunities is on alternatives, but I also focus on making some of the key decisions right. And that is setting objectives, asset mix, doing an asset liability study, ensuring the asset liability study. I wouldn't do it myself. The consultants are doing it, but to ensure that the consultants are using the appropriate assumptions, because as you know, if those assumptions are wrong, it's garbage in, garbage out.
That's right.
So,
absolutely.
And you just want to make sure you understand what those assumptions are basically telling you, because if some of those assumptions, ultimately, my asset liability study suggests that I should be 20% in infrastructure. Well, take a look at those assumptions. Does that make sense to you with respect to the expected returns long-term for infrastructure? How did you come up with that? Asking those very difficult questions and then assessing them and possibly adjusting them because they might not be appropriate because it can have a significant impact on that asset mix decision. So that's another area that I focus on. So I can't share with you the details of some of those relationships because they're in confidential. They're confidential, but I currently have some relationships with respect to that role. Then the third one is fairly unique and not a lot. I don't believe there exists a specific service. I'll call it an investment advisory service in Canada. I think there are some in the US, but I believe in Canada it's fairly unique, and that is providing investment advisory service to institutional asset management firms. And so what does that basically mean that is, I think there are some asset management firms that develop products thinking they're good ideas, but they might not be. And they are wondering, over the next, year or 2 or 3 or 5, why they're not getting the attention or getting meetings with institutional clients. So there's a lot of legwork involved with making those decisions.
That's right.
My background and experience is really having a good understanding of institutional needs. I continuously have engaged discussions with other institutional clients across Canada in CIO level positions. And so I understand those issues. I understand what they're facing. I understand their concerns. I understand what might be possible solutions. And so having that kind of advisory relationship with an asset management institution to basically say, here are the things that you need to be aware of that, institutions are facing.
That's right.
And here are the kind of suggestions that I think are really important. And maybe especially when, for example, they're, hosting an event, and, they're hosting an event and it's very clear that they're hosting an event to support a product that they think they, would like other institutions to hear about. Institutions, they tend to be very smart about that, right? And so they're not going to attend, or if they do attend, they're going to go network for an hour during that presentation. So that's just a few ideas working with asset management firms, but it's ad hoc. It's just everything. It's their reports. It's their sales technique. It's things they need to know with respect to opportunities, potential risks. I can tell you now, use this as an example, and this was what generated the idea, and that is, I would get calls by institution as a CIO. I used to get calls daily, emails daily, tons, to the point where it was really hard to respond to them. And so I had staff just kind of doing standardized responses, because a lot of the decisions and meetings that we would take are the ones that we're specifically looking for.
Yep.
So how do you get in front of those particular clients is something that I can help you with. And so what I mean by that is you have to understand what is the need.
Yes.
And this is not like, I have a great car, you should buy it.
Yeah.
So that's not how it works. But if you go back 10 or 20 years ago, one of the things that I discovered very quickly was I can't believe that anybody would be focused on, if you're an asset management firm, if you're only focused on Canadian equity. We knew 20 years ago, Canadian equity was 30% of portfolios 20, 30 years ago. Well, does that make sense in a global context where the Canadian market was only 3% of world GDP? Well, it's very small.
Yes.
So it was very clear that when some of those restrictions were lifted, that Canadian content was going to decrease. So assets under management for a lot of Canadian equity firms were going to decrease in Canadian equity.
That's right.
And so, but many just stuck to it, which is fine, but they could have diversified a little bit, right? And some did, which was important. Now, the other areas that, was very clear to me was that I saw opportunity. So those were risks. That was an example of risk. An example of opportunity would be in alternatives, and particularly private markets, private equity, private real estate, private infrastructure. And so we've seen assets, grow tremendously in that area. Now, what's the next 5 or 10 years? And so that's where you would want to work with me. And you can work with a very, very well-paid, consulting group to help you kind of do that. And they'll give you a great report and all kinds of study and all kinds of charts. But you're going to get just a really a good conversation with me with respect to what I see and what I know with respect to having that information, that inside information or insights into those institutional clients.
That's right. Awesome. Well, that's fantastic. And thank you for sharing that. I'll definitely have to have an off the record conversation with you and get hopefully some mentorship from you, because that's an area I love to understand and learn more about. And I'm sure a lot of people would as well. So before we come to the end of our podcast, there's a segment that I call rapid fire questions. So I'll be throwing some questions at you, and the first thing that comes to the top of your mind, you can just...
I feel like this might be a psychological test.
No, we'll keep it fun here. So you ready to start?
Sure.
Okay. What's the best advice that you've ever received?
Commit.
What's the worst advice that you've ever received?
Don't commit. That's a hard question, but I could see where that. I've never really listened to a lot of bad advice, so
Good.
I don't remember them.
Awesome. That's a great answer. How would you sum up your career at Hydra One in a few words?
Fortunate.
Amazing. What's the one word that describes Robert best?
Ethical.
What's the one book that you recommend to your viewers?
Oh gosh, so this is where any Warren Buffett, book is they're great reads, so.
Okay. And finally, where can people find you?
The easiest way is just Google my name, and there's contact information there. LinkedIn is obvious, and the other one is Nordivest, and so that's www.nordivest.ca, and there's my contact information there on the first page.
Awesome. We'll definitely be putting that on the bottom. All the links will be included in the podcast. So for all those listening, you can find Robert there. Again, thank you very much for spending some time with me today and sharing your stories and experiences and your inspiring stories. Greatly appreciated. Hopefully we can do this again. And for all those watching out there, thank you for joining. And if you want to listen to more of these podcasts, click on the link below and subscribe. And we'll see you in the next podcast. Take care, everybody.